It was a relatively good quarter, even despite, a lot of the issues, supply chain, demand in China, et cetera. I think that, to me, the most impressive thing is if you think about the trajectory they've been on over the last couple of years, their first full year of profitability was back in 2020, and they made about $720 million.
That was former Ford CEO Mark Fields, and he isn't alone in the belief that Tesla remains to be on the top of the EV industry despite a lot of startups and legacy automakers making an entrance in the electric vehicle space. Although the U.S. car market is saturated with established automakers like Ford, Honda, and Chevrolet, one company stands out from the mix: electric car maker Tesla Motors. Tesla and its CEO Elon Musk gained notoriety in 2012 when it released its flagship car, the Model S1. Tesla's release positioned it as one of the few successful independent automakers and a pioneer in the electric car market.
This year, they made over $12.5 billion, and right now that's more than what's projected for Ford or GM. So it's quite impressive what they've been able to achieve between that and building up to 2 million units of capacity at this point.
Okay, so does this change your view at all about the valuation of this company?
Well, I think, this company has been valued much more as a tech and software company than a regular car company. I think what you're seeing now, they're experiencing what it takes to compete as being one of the big players now in the auto industry, which is when you see demand go down, how do you stoke that demand? The impact on your margins. And I think investors are looking at this and saying, should we go forward and continue to value it as a technology company and the growth involved, or should we value it as a traditional car company?
Notably, it also proved to be a hit with auto buyers, and continues to do so despite numerous hiccups through the years. Tesla, despite numerous issues plaguing the company and its controversial CEO, continues to thrive for various reasons, the most recent of which is the Tesla Dojo supercomputer. Dojo is Tesla's custom supercomputer platform built from the ground up for AI machine learning and, more specifically, for video training using the video data coming from its fleet of vehicles. The automaker already has several large NVIDIA GPU-based supercomputer clusters, which are some of the most powerful in the world, but the new Dojo custom-built computer uses chips and an entire infrastructure designed by Tesla. The custom-built supercomputer is expected to elevate Tesla's capacity to train neural nets using video data, which is critical to the computer vision technology powering its self-driving effort. At Tesla's AI Day in 2021, the company unveiled its Dojo supercomputer, but the company was still ramping up its efforts at the time. It only had its first chip and training tiles, and it was still working on building a full Dojo cabinet and cluster, or exapod. A year later at AI Day 2022, Tesla unveiled some progress on Dojo, including having a full system tray. At the time, the automaker was talking about having a full cluster by Q1 2023. The first quarter of the year came and went without any news of Dojo being in operation. But, to many people's delight, it was recently learned that Dojo came only this summer with a plan to gradually ramp it up to 100 exaflop capacity by the end of 2024. With Tesla's move to have not only its computer-based visual perception being neural net-based, but also the vehicle controls, the company claims to be compute-constrained with its self-driving effort. So, therefore, Dojo could become a difference maker. A few weeks ago, Morgan Stanley released a new note to clients in which the firm's analyst did a deep dive into Dojo. In a note, Morgan Stanley analyst Adam Jonas said, "The autonomous car has been described as the mother of all AI projects. In its quest to solve for autonomy, Tesla has developed an advanced supercomputing architecture that pushes new boundaries in custom silicon and may put Tesla at an asymmetric advantage in a $10 trillion total addressable market." The analyst argued that Dojo alone could add about $500 billion in value to the company. Furthermore, Jonas argues that Tesla's singular focus on designing its own AI chips to train AI on videos could give it a significant advantage in the space. That's not all. On top of accelerating its self-driving effort, Morgan Stanley discussed the potential of Dojo becoming a direct revenue generator. This is notably something that CEO Elon Musk has suggested before. The new factoring in of Dojo has resulted in Morgan Stanley raising its price target on Tesla's stock price from $250 to $400, which is a massive change for large firms like Morgan Stanley. Unsurprisingly, Tesla stock was up by as much as 6% in pre-market trading following the release of the note. Also in the said note, the Morgan Stanley team, led by longtime Tesla analyst Adam Jonas, predicted that the massive drive in value could come from Dojo potentially unlocking new revenue streams through the wider adoption of robotaxis and software services. The analysts compared the potential of Dojo at Tesla to the same forces that have driven Amazon Web Services to propel Amazon's profitability to new heights. Investors have long debated whether Tesla is an auto company or a tech company. We believe it's both, but see the biggest value driver from here being software and services revenue, the note stated. Dojo, an in-house supercomputer that has been in the works at Tesla for some 5 years, is designed to train AI systems to complete complex tasks like assisting Tesla's driver assistance system Autopilot, as well as help propel its full self-driving efforts. Morgan Stanley analysts see Dojo as being able to open up new addressable markets that extend well beyond selling vehicles at a fixed price. The analysts added that the latest version of Tesla's full self-driving system, which is expected to be unveiled at the end of the year, and Tesla's next AI Day, which is expected to happen in early 2024, will be worth watching. According to a recent report published by Taiwan's Economic Daily, Tesla is confidently doubling its Dojo D1 supercomputer chip orders with TSMC. The custom Tesla Application-Specific Integrated Circuit ASIC is designed to power its Dojo supercomputer to train driver assistance and self-driving AI models, but is also expected to find wider use in robotaxis and associated services. The report from Taiwan says that Tesla will double its Dojo D1 ASIC order with TSMC to 10,000 units in the coming year. It adds that the order volume will continue to increase into 2025. The Economic Daily frames this story partially from TSMC's perspective, saying that the chipmaker's HPC-related order momentum has increased thanks to Tesla. Neither Tesla nor TSMC have issued statements about the rumored Dojo D1 chip order increase. The source report characterizes the Tesla TSMC as something of an open secret. Moreover, Economic Daily sources claim to know that the Tesla supercomputer ASIC mainly uses TSMC's 7-nanometer family process and combines it with info-level system-on-water SAW advanced packaging. Now, as you may well know, the supercomputer isn't the only thing Tesla has going for them. Another, among the countless others, is the Tesla Highlands. In fact, just hours after photos leaked of the upcoming Tesla Model 3 refresh codenamed Project Highland, Tesla has officially unveiled its highly anticipated facelift in Europe. The Model 3 has been due for a refresh, remaining mostly unchanged since its original release in 2017. Most car models get a mid-cycle refresh after about 3 years, and big exterior changes after about 7 years. But Tesla has always done things a little differently, with smaller continual improvements rather than sticking with traditional model cycles. The refresh includes a facelifted front-end design, interior changes like more screen space, which includes a new rear display, and increased range. Tesla says that the refresh replaces more than half of the parts in the vehicle, though we're not exactly sure how it measures that metric. The most striking change is the new design, which keeps most of the same look of the current Model 3 but changes the front end to look sleeker, removing the somewhat bulbous bump in the front end of the current Model 3. Tesla says that the refreshed Model 3 will have a longer range, rated at 344 miles WLTP for the SR RWD version, and 421 miles WLTP for the LR, both with 18-inch aero wheels. These numbers are an 11 to 12% improvement from WLTP ratings for the current Model 3. But note that those are WLTP numbers, so they're bigger than the US EPA numbers will be when they come out. If we expect a similar 11 to 12% improvement, then you'll see a roughly 300-mile EPA range on the SR and about 370 miles on the LR. Tesla has also been accused of overstating vehicle range, so these numbers should be taken into context. This increased range largely comes from improvements in aerodynamics, with a lower and less bulbous front end, channeling air around the vehicle more effectively. This has resulted in a CD of 0.219, Tesla's lowest yet, down from 0.225 on the current Model 3, which improves range by 5 to 8% on its own. Overall, those are just two of the many other proofs that Tesla remains to be the leader in the EV space. Make sure to subscribe for more.